All right, let's talk about a long lost stock, the poster boy of COVID stocks, Zoom Communications. Now, Zoom has come down around 70% since its all-time highs, which comes at no surprises, right? Most growth stocks, most work from home COVID stocks have come down significantly. Now, might this be the time to revisit this great company and profitable one? Very, very important. Zoom is profitable. It was actually profitable when it went public as well. So one of the few to do that. Now, the main reason I'm doing this video is because, first of all, it's down back to the levels it was back in 2020 before it went up like crazy. And secondly, they recently reported earnings. And to be honest, pretty good. Still profitable, free cash flow positive, actually pretty much printing money at this point. And margins are there as well, signing bigger clients, which is very, very important, especially going out of this pandemic. Most people still think it's just a COVID play, but no, I think they are coming out of this pandemic as a much, much bigger and stronger company. Now, let's have a quick look. So I'm here on stockhart.io. Very, very simple way to find out if a company is doing well, if it's going to be a good investment or not. Very good way to start your investment journey. By the way, we have the channel's portfolio on it. It's in the link in the description and pinned comment. It's free to follow, so why not? And you better create an account as well, because we're going to have a competition pretty soon. You might win some prizes there as well. Now, if you do want to upgrade to a premium version, use code CouchInvestor, you'll get 10% off. So Zoom Video Communications, high growth potential, strong operations, calm investor sentiment, which is very unusual these days. It has obviously underperformed the market. Yes, since it went public, it's still up quite significantly. But if you look at the 1 year, you can see here it's down 66%. 3 months, it's still down 18%. But as you can see here, since it's, well, a bit earlier this month, it has gone down quite a bit. So quite nice there, fairly priced stock. But then analyst consensus is a bit less than most huge and bigger, most popular growth stocks out there. 15 have a hold rating, 9 buy, 0 sell. If we look at the analyst price target, the average that is, it's at $134. Right now, today's price is $110. So not that much of an upside. Now again, after they report earnings, etc., it does take a couple of days, maybe a week or so, until we get new price targets, so that might get updated. But as for free cash flow, $1.5 billion, pretty good for a market cap of just close to $33 billion. That's not bad at all. PE ratio of 26. I think next 12-month PE ratio is a bit less than that. Not bad at all for a company that is still growing. I think that's pretty reasonable. Now, as for an investment strategy, it's good for a buy and hold portfolio. Why? Because, well, it IPO'd not so long ago. Company size, pretty good, $33 billion. Growth potential, yes. Sales growth, yes. And it has plenty of cash. Now, is it possible for a growth portfolio? There, because it's already $33 billion of a company, usually it's better to have like 10 billion, maybe even less. But still, again, growth potential, sales growth, cash availability, past investment returns, obviously in the last year or two, not great, but overall quite nice. And then sentiment is neutral, but eventually that might change pretty quickly. Now, obviously, I do want to know if you still have Zoom, because I know it was an extremely popular stock to hold at the beginning of this pandemic. But I'm curious to know if people still hold it, or maybe some of you actually initiated a position after they reported earnings, which we're going to have a look in just a bit. So leave it all down in the comments below. Now, if you want to support this channel, check out the link in the description to get the 10 best stocks to buy now, or go to fool.com/couchinvestor. Would really appreciate that. Now let's have a look at the numbers. All right, so first up, we have some acquisitions here. Zoom acquires Solvvy to bolster contact center offerings. So there is Zoom Contact Center now mixed with Solvvy. They say it's accelerated their expansion in conversational AI in $18.4 billion projected market by 2026. Okay, not bad. broadens Zoom's contact center offering with Solvay's automated, integrated, and easy to develop service center, and aligns culturally with their focus on delivering customer happiness. Now, it's a very interesting field that they're entering here, and probably one that might do extremely well in the future. Now, they launched Zoom Whiteboard. If you use Zoom constantly, you've probably seen that being added at the top bar, and Zoom IQ for sales. They also have some new partnerships, so strong wins show enduring case for Zoom Phone and early potential of Zoom Contact Centers. Now, Avis, we know, huge car sales company, renting company. Humana is actually a health insurance with over 17 million members, so pretty good. All right, and now the main numbers here. So continued top line expansion, it grew 12%, not great for a hyper growth company, but still growing quite nicely even after the pandemic. And again, year over year comparisons here are a bit difficult, but still 12%, pretty good. They also hit 3 million Zoom Phone seats during the first quarter. Now, it just becomes better and better here. Strong growth in enterprise with incremental spend. So they grew that segment, the enterprise revenue, 31% year over year, and now enterprise revenue share sits at 52%. Enterprise customers, they grew that by 24%, and then the net dollar expansion rate for enterprise customers is at 123% in this quarter. So very good there. And as for customers that are spending more than $100,000 in the last 12 months, they grew that by 46%. I repeat that, they grew that by 46%. This is extremely important for the long-term thesis of investing in Zoom. This really shows you that it's not just a pandemic stock. This shows you that they can go after those enterprises and make them pay a lot more than the usual ones. Now, as for margins and expenses, so gross margin non-GAAP 78.6%, R&D expenses 7.9%, sales and marketing 25%, G&A 8.6%, operating margin of 37.2%, so pretty good. Earnings per share diluted non-GAAP $1.03, so not bad overall, right? And now again, there is this metric here that is a bit more different than the others. So RPO is remaining performance obligations, which consist both of billed and unbilled consideration that they expect to recognize as revenue in the future. So as you can see here, grow quite nicely, right? Unbilled 69%, nice. Deferred revenue 22%. Then current and non-current RPO, non-current 93%, current 25% year over year growth. As for cash, their cash position grew from 4.7 billion to 5.7 billion. Operating cash flow and margin $526 million and a 49% margin. Adjusted free cash flow and margin $501 million and 46.7%. So really good if you ask me. As for Q2 and the fiscal year 2023, the outlook, so they expect for the next quarter revenue to come in between $1.115 and $1.12 billion. Non-GAAP operating income of $362.5 million at the midpoint, and non-GAAP earnings per share 91 cents at the midpoint. As for the full year, they expect revenue to come in at $4.54 billion at the midpoint, non-GAAP operating income of $1.49 billion also at the midpoint, and then non-GAAP earnings per share 3.74 at the midpoint, approximately. So overall, to conclude, yes, I'm going to add Zoom to the channel's portfolio on stockcard.io. Again, if you want to follow that portfolio, it's free, link in the description and pinned comment. I'm going to add it because I can see the way they will be growing even after the pandemic. They are profitable, free cash flow positive, high margins. Why not? They're doing exactly what people feared they won't be able to do, and that's attract new customers, attract bigger ones, make the existing customers pay for extra services. That's exactly what they've been doing and executing quite nicely, and that's why it deserves a position in this channel's portfolio. Now, some of you might ask, why doesn't it deserve a position in your actual portfolio? Well, because there's no spots available there. But if there were, would be considered probably one of those companies that I would add, but there are so many other greater companies out there. Nvidia, AMD, the Trade Desk. Now the Trade Desk is actually in my portfolio, so scrap that. So overall, great company. I do think it's going to have a great future ahead. Do share your thoughts down in the comments below. And if you enjoyed this type of videos, do leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button, and I'll see you all in the next video. Bye bye.